Good afternoon, ladies and gentlemen. It's my pleasure to welcome you to this Euractiv debate, Sustainable Finance, Opportunity or Threat for the Manufacturing Industry. Our event today is supported by VDMA. They are the German association representing the mechanical engineering industry. Before we start, a few brief words about Euractiv. We're a pan-European media. We publish EU policy news in 13 different languages. And in addition to our publishing business, we also host about 80 policy debates every year, most of them now, of course, being online. Once our speakers have given their opening statements, we'll turn to our panel discussion. We look forward to a lively discussion with lots of audience interaction. My colleague Teresa Dominguez will be moderating the Q&A today. Teresa, welcome to you.
Good afternoon and welcome. When writing the questions in the Q&A section, which you can find to the right side of your page, please make sure you identify yourself, keep your questions short and concise, and indicate to which panelist you are addressing the question. For your information, we are live streaming this debate on Euractiv's YouTube channel and tweeting with the hashtag EA Debates. So do not hesitate to join us for the online discussion. Thank you and enjoy this debate.
Thank you, Teresa. And you can see the hashtag EA Debates here in front of me. Finally, please also remember that today's discussion is on the record. So, sustainable finance. We can get very technical in today's debate, but we do want all different stakeholders tuning in to be able to follow the discussion. So as simply as possible, I'm going to briefly explain where we are in the policy timeline. Since the publication of the Sustainable Finance Package in 2018, the European Commission has sent very clear messages to investors in Europe that the financial sector must not harm the planet and its citizens and must avoid greenwashing. The objectives of the Green Deal build on the ambition to make Europe's economy the most sustainable in the world. Sustainable finance is supporting the Green Deal by channeling investments into the transition towards a climate-neutral economy. In the Commission Action Plan for Financing Sustainable Growth, there was a call for the establishment of an EU classification system for sustainable activities, and this is known as the EU Taxonomy. Under the taxonomy regulation, an economic activity must contribute to achieving climate goals and different environmental aspects in order to get investment. Now, the basis for the taxonomy's technical criteria is an imminent report that will be provided by a technical expert group in which specific technologies and technical thresholds are defined. And these will have access to sustainable financing. So this technical expert group report is very important as it will help to ascertain what is actually classified as a sustainable investment. So lots of things to discuss today, and making up the panel, we have Andrea Beltramello, who is member of Cabinet of Executive Vice President Valdis Dombrovskis at the European Commission. We have Martin Hojsik, who's MEP and a shadow rapporteur of the Sustainable Finance Resolution in the Parliament, and Martin will be joining us in about 10 minutes from now. Next, we have Elena Viñas Fiestas, who is Deputy Global Head of Sustainability and Global Head of Stewardship and Policy at BNP Paribas. Wolfgang Kuhn, Director of Financial Sector Strategies at ShareAction. And last but not least, Karl Hauskan, who is President of VDMA. I've asked each panelist to kick off with a short 1 to 2 minute introduction. So without further ado, may I ask that we hear from the Commission first. So Andrea, the floor is yours.
Good afternoon, everybody, and thanks for having me at this virtual conference. So I will be very brief in view of the debate. Just to say that sustainable finance, in a way, is not an option. We have a very clear objective from the Commission to reach climate neutrality by 2050, to become the first continent to be climate neutral in the world, and to lead all other jurisdictions in this important endeavor. We have an intermediate target by 2030, which is also very ambitious, which is to cut emission by at least 55%. At least this is what the Commission has proposed. And we know that in order to get there, we will need to mobilize massive investment. Even just to reach our 2030 intermediate target of at least 55% emission reduction, we will need 350 billion euros of additional investment every year. At the current juncture, with public budgets being under strain from the COVID crisis, and in spite of the funding that the Commission has proposed and that the EU will make available under the EU recovery plan and also our multi-year budget, well, even with these massive investments, we will not get it there only with public funds. We will also need a contribution from the private investment. And we need to mobilize that private investment also with regulatory tools. And this is what our sustainable finance agenda is about. This is what our taxonomy or classification of green economic activities is about, is precisely to provide a common language whereby we can all identify those projects that can get that investment and can help us to transition to that climate neutrality objective. And this is a very important opportunity for industry, for European industry, and in particular for the manufacturing sector, because they will need to adapt to the Green Deal objectives. So all the funding that they can get in order to transition towards that objective will be very useful, and also because it will help them to be in the lead at the world level, as there is a collective effort to get to, let's say, the endeavor to meet the Paris objective. So the industry that will be at the forefront of those efforts will also have a competitive edge vis-a-vis other industrial sectors in other countries. So we think that not only this is a challenge, but it is also an important opportunity, and private sustainable finance can help in that respect.
Thank you for those opening comments, Andrea, and I note what you said at the very beginning. It is not an option, so we'll come back to that during our discussion. But can I see we've been joined by Martin. Martin, I'm just going to give you a few moments to collect your thoughts for your opening statement. So before I turn to you, I'd like to turn to Elena for your opening statement, please.
Good afternoon, and thank you, Rose. In the name of transparency, I would share with you that I was actually part of the technical expert group that work on the taxonomy reports that you just mentioned, Rose, and I am currently part of the platform Sustainable Finance that has just been recently formed. Now, what is the sustainable finance strategy from my perspective? For me, it just reflects the acknowledgement by EU authorities that there is no transition or Green Deal possible without the financial sector. So therefore, the strategy is one of the centerpieces of the Green Deal, which includes a series of measures, some in the form of regulations. But if we were to really summarize them, we could narrow them down to two key asks for financial actors. The first one is that all financial actors throughout the financial value chain ought to incorporate environmental, starting with climate change, and then the other environmental aspects. Increasingly, we think that some of the social aspects and governance aspects will be included. We can debate on that later on. But for those factors to be systematically included in the analysis, risk management, and decision-making processes, as I said, throughout the financial value chain. In other words, basically it means that credit and investment decisions and their policies, underlying policies, need to progressively adapt to include the environmental challenges that we face. So while we're asked to increasingly distance ourselves from harmful assets, we're equally encouraged to approach ourselves to sustainable assets. So those are the products, services, activities, and technologies that would allow not only other companies, but society as a whole to transition, and to transition not only to a carbon neutrality economy or economic model, but also a much more sustainable and hopefully inclusive model. In other words, the overall goal is for the financial sector to minimize its negative externalities and to finance and be that engine for good, and to finance the transition that we need, as Andreas was mentioning, to close the investment gap. What that means for companies, it means that increasingly how they manage environmental risks and what is the environmental footprint of their activities will be becoming increasingly a more of a decisive variable of whether or not a financial actor will invest or finance in a company or a project, whether it is for the good or the bad.
Thanks, Elena. And we'll certainly come back to this concept of throughout the entire financial value chain. I think that's important to pick up on later. Martin, Shadow Rapporteur of the Sustainable Finance Resolution in the Parliament, your opening thoughts, please.
Thank you very much. First of all, it's great to be here. And really interesting words at the beginning. But I would like to also step even more backwards in terms of why we need taxonomy and where it's actually coming from. I think one of the very fundamental issues is, and what the taxonomy should be answering, and that's, I think, for me, very, very important. What is sustainable investment? This is first time that there is a legally binding framework that it's setting the rules of what is sustainable investment. And that's not only about the climate change as an issue, that's also about biodiversity, circular economy, and these are all very important elements. So for me, this is also giving the markets, giving the investors certainty and kind of basic set of rules, and the legislation, and actually I have the taxonomy always printed on my desk, is showcasing what are the basic rules, what define the sustainability of an activity. And I'm also happy with the division that we made at the time, and that's the legislation in setting up the framework, and then it needs to be filled by experts looking at the details. The policymakers are not trying to work on the kind of the technical details, but are setting the basic framework. I think ultimately, and I was very happy that we managed to, within the process of trialogue, have it as a part of taxonomy, is that I would like to see in the future a complete taxonomy. It doesn't not only what are sustainable, but having, like you have on the fridge and the energy label, having all the different levels of sustainability. This is something which is being anticipated. Now, the taxonomy is not only about the green activities, but has also very important principle, and that is do no significant harm. That helps out to screen, so to say, the not policy coherent types of activities. It's not a brown list, but it's a way to judge whether activity is going against the principles that are laid out in taxonomy. And I think it's provided a really interesting fundament, not only for the investors, And increasingly, we see a desire of the public, but also investor community, to invest into sustainable activities, but also for the governments to assess whether the spending they are doing is sustainable, or also whether it's policy coherent with their global obligations, like the Paris Agreement, where, for example, within the RRF, the use of do no significant harm, so the recovery and resilience facility, I find very important.
Thank you, Martin. And the question that you framed at the beginning, what is sustainable investment? I'm sure we'll come back to this discussion about definitions during the debate. Wolfgang Kuhn from Share Action, your initial statement, please.
Thank you. Share Action is a civil society organization that wants to see investors and the companies they invest in take responsibility for the adverse impacts on people and planet. We research and campaign on climate, biodiversity, human rights, and public health. And with fossil fuels, our work is relatively simple. Fossil fuels have to be phased out completely at some point, so there's a clear direction. Other industrial sectors are more difficult, but cement and steel alone are estimated to account for 15% of anthropogenic CO2 emissions. So they're very important. That's why this Thursday we are publishing a research paper called Heavy Industry Decarbonization, a Financial Sector Perspective on Steel, Cement and Plastics. With the support of the European Climate Foundation, we conducted 15 in-depth interviews with experts on the subject, all from somewhere in the financial or public sector. We wanted to see how hard it is going to be, what barriers are there. And this scoping study reveals that the EU financial stakeholders remain at very early stages of engaging with heavy industries on decarbonization. With many investors recognize and agree that these sectors will need to decarbonize, they often lack both a clear unified vision and deeper understanding of various decarbonization pathways. There's no clarity at all on what the pathway is going to be. Is it circularity, new materials, material efficiency, CCS, and compartmentalization of knowledge around decarbonization exists at both industrial sectors and within banks and institutional investors. Expertise mostly sits with sustainability teams, not at the client relationships or the portfolio construction level. Many of the participants interviewed acknowledged the untapped potential of debt markets, but also suggested that the green bond market was not the conduit yet for heavy industry sectors. Requiring stronger governance from issuers was frequently recognized as one of the most impactful ways to connect financing with company-wide decarbonization strategies. Most participants recognize the enormous role of policymakers in helping create market environments friendly to the development of technology and innovation required for decarbonizing heavy industry sectors. However, acknowledged that their own engagement with policymakers could be dramatically improved. So there's lots to do, and I suppose we'll talk about that.
Great, thanks Wolfgang, and we'll come back and discuss this clarity of pathways that seems to be missing according to you. But to finish off with the opening statements, Karl Hauskan, please, the floor is yours.
Yeah, good afternoon to everyone watching and listening from my side. Basically, I'm playing two roles here. First of all, I represent the VDMA, the German Engineering and Machine Building Association, which is the largest industrial association at this moment in Europe, representing a little over 3,000 companies and about 1.2 million people working in that industry. And the VDMA is one of those industrial organizations heavily supporting the sustainable finance concept. On the other hand, let's say I'm the wild animal out of the jungle of the real economy. So I own and run a medium-sized business in the machine building industry. We manufacture hydraulic components and systems. It's a company that has roughly 2,500 people working for it and 400 million euro sales. So we are also, let's say, one of those that have to deal with whatever is the result of what's in the process right now. Well, and I strongly believe, and this is representing the VDMA as well as the company, that sustainable finance is a good thing, and it definitely deserves to be executed well. There is a big consensus on the target and on the principles. However, I believe there is still some way to go for the details of the taxonomy itself, especially on how to define, or even the question, is it possible to ultimately define what is a sustainable technology, what is a sustainable product through the value chain, and what is not, and how binding can such a taxonomy be, also in the light of new technologies coming up at a very fast pace. So there is no finishing line of technologies coming up. So I believe there are some difficulties in that, which I hope we can discuss at a later point in time today.
Thank you, Karl. Listening to your opening statements, it seems that there are a couple of main themes that have emerged. One theme is certainly definitions. Karl, you just mentioned, is it even possible to define what a sustainable product is? And including in definitions, I also say lists belong in there as well. And the other main theme that I'm picking up on is practicalities. How will this actually work in practice? And perhaps I'd like to start there. Karl, you spoke last, so you'll get the first question. How does a non-listed, family-owned company, by definition, an SME, how do they look at sustainable finance? Do they view it more as an opportunity or a threat for the manufacturing sector?
Well, first of all, I believe that most of the companies do not have that on their radar yet. It's something which is heavily discussed in associations like the VDMA. It's discussed in those circles that are working on it itself. It's not yet a broad discussion in the medium-sized companies. I strongly believe that it has to be, so I'm working on that. VDMA is working on making this a broader subject, because it certainly will affect not just large corporations, it will also affect small and medium-sized companies. To which extent, it's hard to say. If you look at the German machine building industry, there is this specific fact that most of the companies are family-owned, medium-sized. The average size of a member company in the VDMA, to make you aware of that, is roughly 250 to 300 people working. So with our 2,500 people, we already are a relatively large company within this industry. And they're family-owned, and they're heavily based on different levels of equity. Equity which is in the company, or what I like to call secondary equity, which is equity that is accumulated in the family. So external financing or financing from the capital market is not an instrument to such extent as it might be in other industries or in other countries. And that could be a reason why the discussion is not so broad yet. However, I see a great chance there, definitely for all those companies who do have a business model, who do have a product line that is in line with sustainability rules.
Okay, so let me go back to the Commission and also to Martin in the Parliament on this. How would it work in practice for SMEs? So SMEs on the whole, as we've just heard, they don't really go to the markets for their financing. They tend to go more to their local banks. I mean, will their local bank managers have to take sustainability into account before offering loans? And might these loans now be at a punishing interest rates? I mean, do you see this resulting in financing actually drying up for SMEs? Andrea?
No, I don't think that this will result in financing drying up for SMEs. If anything, I think this would be creating more opportunities for SMEs. First of all, It's true what you said, that at the moment, banks remain the main source of funding for European SMEs, and this is likely to remain the case also for the foreseeable future. However, we should not forget that one of the objectives of the Commission and the EU as the whole source of funding for SMEs, because they are depending too much on bank funding, and when bank funding dries up, there are no other alternatives, as we have seen in the previous crisis. So some of you may be familiar with the Capital Markets Union initiative, which is very closely related actually to sustainable finance, and the efforts that the EU is putting in place to give more opportunities to SMEs also in terms of funding. In addition, we should also highlight that this is not only about capital market funding, it's not about just one segment of finance. The sustainable finance agenda is very comprehensive. It really covers all segments of finance, potentially also including banking. So there is, again, we are looking at, for example, green mortgages and other types of green loans for our new sustainable finance strategy. So it's not only about, let's say, raising funding on capital markets through green bonds. So those type of funding sources can also be, let's say, to SMEs. In general, we are assessing how we could integrate sustainability considerations more generally into the financial system, and in particular into bank prudential requirements, for example. So how much capital banks need to be putting aside, because, for example, if we find that there is a link between the risk that companies and banks are exposed to when it comes to climate, or if we see that an investment or a loan to a green asset could reduce the risk to which the borrower is exposed to, this could also lead to a different treatment of how that asset is in the bank's balance sheet. So I think we need to take all these aspects into consideration, and the net result could actually be very positive for the flow of funding to the economy. Finally, very briefly, I think it's also important to always keep in mind the principle of proportionality. We cannot apply the same rules and the same considerations to large listed companies and to small unlisted companies, even to family businesses. So we need to have very, let's say, tailored rules in a very proportionate approach there, which, by the way, it's what the Commission has already proposed, and the Parliament and the Council has already agreed, for example, on the taxonomy, but also on other pieces of financial legislation when it comes to sustainable finance.
Okay, and Martin, please chip in on this point as well. And I guess the follow-up question is, how will policymakers ensure that no industry, big, small, or otherwise, or no technology will get neglected when it comes to selecting the most sustainable ones for access to financing?
First of all, I think this is not a system. The taxonomy is not a system where it's mandatory to apply it. This is a system where it sets up the criteria for what is sustainable investment. And until we have full taxonomy, we don't really try to benchmark every loan, every product. And this is looking at financial products and activities. Now, I think, and I agree with Andrea on this, this is not an obstacle. This is a great opportunity, and hopefully, and I expect it to act as a motivator also for small and medium businesses and family owned. I'm not so keen on the term of family owned, because you can have a multinational that's family owned. That's okay that it's family owned, but it's kind of not reflecting necessarily the size of the business and therefore the abilities of the business to comply with certain rules. Now, I think this should be an opportunity for businesses to look at, okay, this is where if we go and try to invest or look at possibilities, how to do sustainable activities, how to improve our energy efficiency, there is a new line of products, there are new funds available if we do exactly these things. So actually it should be kind of a signal to the businesses, irrespectively of size. And I agree that we need to be very careful to make sure that this is not only for the big players, that it's accessible not only to the small and medium enterprises, but also to the startups and to the companies in the phase of acceleration, and is actually a way of mobilizing and multiplying the private finance for sustainability action. And it gives it a certain order, gives it a certain set of rules, and therefore a certainty for the market players as well as the businesses themselves, because they will know what are the criteria.
Okay. Wolfgang, let me ask you, do you think the policymakers have gone far enough? You talked about heavy industry decarbonisation, and you clearly think that there's a long way to go there. Should the rules be stricter in your view?
I don't think it's so much a question of how strict the rules are, it's and how detailed they are. And I'm a big fan of the taxonomy, but I think there's something about ambition, and what Karl has said about sustainable finance not really being an issue in his area of German Mittelstand. I think that's very interesting because it matches what we come up with when we look at European banks. Yes, there is a big difference between leaders and laggards, but in general, the ambition isn't big enough. And that means that there is now increasing focus on net zero ambition statements, but really the detailed work with clients to discuss what can be done to decarbonize is not happening yet. And as I said, it's not surprising because you have areas, pockets of knowledge in banks and at investment managers, but that doesn't really spread through the whole bank. And so if the bank can't put it out to the clients, then how are the clients who are not having big ESG teams, how are they going to do it? So to that extent, I would say governments probably need to do more in raising the ambition, and that doesn't always need to be linked to a big piece of legislation. But well, Europe obviously has now a big block of legislation, and before the agenda started, there was a lot of discussion at conferences where financial players said we need to see more from the government. Well, now we have stuff from the government, from the EU policymakers, and now that needs to be implemented. But it's still not complete regarding manufacturing sectors, because well, there, as I said, it's not so easy to say what is green and what is not green. I mean, it is now with the taxonomy, and I'm not so worried about the brown not being defined properly, because in a way it is, it's everything that's not green. But I think we need to have a plan for brown sectors and how we decarbonize them. And I'm not sure I can see that the financial markets are able to do that on their own without a policy.
Okay, I'm going to bring Elena in a second, but Karl, there was a lot of response there from the policymakers and also from Wolfgang to your initial statement. So do you want to come back at that?
Yeah, I just would like to a quick statement, not to be misunderstood. When I talk about awareness of sustainable finance, I'm not talking about awareness for sustainable business models. That's a totally different thing. If you look into my industry, I think you'd be surprised how many companies are working since years on the one hand, to come forward with products that serve issues like efficiency, like recycling, life cycle. This is not just what we want, not just what policymakers want, but bigger and bigger parts of our customers are wanting this too. We had a project for a Japanese machine tool manufacturer to design a hydraulic power unit. The machine was meant to work on housings of mobile phones for a large global mobile phone maker. And this global mobile phone maker made the very clear specification that every machine used in this process must be at least 30% more energy efficient and must use at least 30% less CO2 emissions than the one that was used for the generation before. And we won this project because we came forward with a hydraulic power unit that reduced CO2 emissions for this specific machine by over 70%. So the markets are working already well, and many companies incorporate that into their business models. That's for me very important to state.
Okay, Andrea, I know you want to come back in, but before you do, I'd like to give Elena the chance to say a few more words. And Elena, I guess the main question for you here is what is going to be the greatest effect on the financial sector, and are you already fully prepared for this? How are you going to practically implement sustainable finance, and particularly the first round of regulations, which, if I understand correctly, will take effect in March next year?
Thank you. And if you allow me, I'm also going to make a couple of comments of what it has been said. But I'll start with your question. So in terms of the impacts, I think there will be two, grossly speaking, key effects. So from a very pragmatic point of view, the sustainable finance package, and what I was talking about at the very beginning about the increasing incorporation of ESG, environmental, social, and governance issues into decision making. What it means is that we will have to progressively but constantly adjust our credit and investment policies. Yeah. In the case of climate change mitigation, and I'm taking this as an example, this what it means in practice is the progressive decarbonization of both credit and investment portfolios in line with the EU objectives. Some of us, we have already started working on that even before the regulation was put in place. We have started by developing an exit policy from thermal coal and establishing thresholds in the form of carbon intensities in line with the trajectory set up by the International Energy Agency for power generation. We have also engaged with International Energy Agency to ask for not only an overall 1.5 degree scenario, which is now available, but for specific sectorial scenarios for the different sectors and activities, because our intention is first to align our energy and electricity mix of our portfolios, for then do the same with the rest of the sectors. And this leads me to one key comment that I think it was Martin who said, we need a fridge where you have everything available. Well, actually, and if you allow me to politely disagree, I think we don't have the luxury in terms of the time to develop all of that. I mean, this is someone that has worked for 2.5 years on the taxonomy. Believe me, unless the EU is ready to create an army of experts, it would be impossible to have a green, a brown, and a neutral taxonomy and to have it updated. We need to be very, very pragmatic and choose which ones are really, really relevant. So that's one comment going back. The second is that while, as said, we will have to progressively decarbonize our portfolios and reduce exposure to those activities, we will have to increase our exposures into those technologies, products, services, and companies that on one hand allow the rest of the economy, and as I said, even society to transition, but also in those companies that are better, that are fit for purpose. And fit for purpose means that they are ready to act in a carbon neutral, a more environmentally efficient and hopefully inclusive taxonomy. Yeah, I said that is the number one role of the taxonomy, and I would love to have the opportunity to go back to the taxonomy later on, Ross. But your question was, well, is the industry ready? I would say there are different degrees of readiness, yeah, and without any doubt. Now, for an organization and someone who has worked in sustainability and sustainable finance for 18 years, I would say that there are, we have a lot of tools and knowledge to do part of the work, but also we need to be very, very clear about what else is needed. On one hand, in terms of methodologies and development, for instance, for stress testing, is really early days to make it compulsory. We don't really know how that is done, and that is the same for central banks. There's still not a, let's say, solid enough methodology. So that's just one example. Biodiversity is another area. We might know much more by the end of the development of the taxonomy, but today it's an area that we are, just discovering. So we need to be very careful about making compulsory certain things for which, that we don't really understand, and for which whatever we might put in place might have the opposite impact within the real world. But that aside, the number one problem that we face is the lack of quality, comprehensive, reliable, and comparable data. It needs to be fully understood that the quality of not only reporting, but of integration of environmental, social, and governance is directly correlated to the quality of reporting of the companies we cover. Now, the reality is that while most companies and listed companies, report voluntarily, they, what they report on and the methods they use are so discerning. I mean, there's varied so much, which makes comparisons, aggregations, and integration very difficult. We know that the purpose of the revision of the non-financial reporting directive is to improve the quality and usefulness of those disclosures. We hope that we're going to encourage non-large companies, always with the principle of proportionality in place, also to disclose, but we really hope that private large companies are also obliged, and also all those companies who are non-European but have significant operations in Europe. I will finish by saying we all know that financial markets are by nature global, right? So if you allow me, I would like to take advantage and advocate that the same way that we have managed to have a pretty standardized understanding of what turnover, revenues, or a capex is, we should really work to have a global understanding of what some of the environmental metrics are and how they are, the methods to develop them. That is irrespectively of whether or not in the different geographies those indicators are compulsory for companies to disclose. But we really, really need to work at international level to have a common understanding. Otherwise, it's going to be extraordinarily difficult for financial institutions to do justice to the different companies.
Elena, there's a lot of food for thought there, and thanks for that very comprehensive overview and some of the challenges facing the financial sector. So I would like to go back to Andrea and then to Martin. I mean, do you think that all the definitions and the metrics, are they clear enough? Or as Elena was just saying, is there a kind of room for maneuver that will enable some companies to not disclose what perhaps they should be disclosing? Andrea.
Yes, thank you. First of all, I would just like to take the opportunity to make a very important clarification, which is quite fundamental to what we are discussing, going back to something that Wolfgang said. The fact that an activity is not in the taxonomy, is not eligible to be part of the taxonomy, doesn't mean that this activity is brown. It just means that it is not eligible to be part of the taxonomy of environmentally sustainable economic activities. but there are many other activities which may not necessarily be, let's say, polluting or very polluting, that are not part of the taxonomy, for example, because they do not give a substantial contribution to one of the 6 environmental objectives, say climate mitigation, and at the same time, they do no significant harm to the other 5 environmental objectives, which is how the taxonomy in broad terms sets out how an activity should be eligible. But it's not this, let's say, very simplistic dichotomy between green activities and brown activities. And this is also shown by the fact that in the taxonomy regulation, the European Parliament and the member states decided to ask the Commission to come with a report next year on the feasibility and appropriateness of a neutral taxonomy, meaning that the co-legislators themselves envisage that there could be a categorization of activities in between what is green and what is brown. And I would also like to echo very much what Elena said on the sequencing. Of course, in an ideal world, we would have the perfect taxonomy covering everything, all green activities, all brown activities, all social activities, so all, let's say, the activities that are relevant for environmental, social, and governance investment. But we decided, we made a very conscious choice to start in steps, and to start, therefore, with what we consider to be the most urgent taxonomy, so the climate change taxonomy, which is what the technical expert group has worked on, and then to move gradually to all the other environmental objectives, and then potentially to other taxonomies. And we're very convinced that this approach is paying off, and the proof of that is that we are already going to adopt in the next weeks the first taxonomy. I'm not sure we would have got here if we had started with a holistic, comprehensive taxonomy covering everything under the sun. And I think this is also very relevant to your question. We need to give companies time to adapt, and this will make it easier for them to, let's say, see how they can be taxonomy eligible, to report on their alignment with the taxonomy for the financial sector, to identify activities that are relevant for the taxonomy. And this phased approach also helps all the operators to get used to the taxonomy and to really, in a way, harness the big potential of the taxonomy. So I think it would be much easier for all economic operators to also get used to the taxonomy. And one thing that would be very important now for the platform Sustainable Finance, of which Elena is a member, is this feedback loop between those who are, let's say, creating the taxonomy and the users of the taxonomy. And the users of the taxonomy, be they financial sector or industrial actors, will have to feedback, and the taxonomy will be a living creature. It will not be a snapshot in time, but it will have to evolve also on the basis of the feedback that we receive from those who would use it.
Okay, I will bring Karl back in a moment to respond to that. But first, Martin, you've got that taxonomy printed out in your office there. Do you consider it to be the most urgent taxonomy? And is it flexible enough, as Andrea has just suggested?
Well, let me start from what Andrea said on the living creature. I think this is a very good remark, and I think this is also where it's really important to keep different stakeholders involved, including the member states and the parliament. I think this is something where having this conversation, it's helping us then to also improve the policy making on these areas. I think this will be almost standard approach. Now, on Helena, what you said, I really appreciate. I don't think it's a criticism. It's something which people like me need to hear. So please keep it coming. And yes, I see your concern. If we are going for full taxonomy, maybe we will lack the time to actually properly implement the one that we have. So if you have any more supporting arguments, please send them my way. I would be definitely interested in them. Now, I think what we have to realize now, in some ways, we already have several tiers of activities. it's not, we don't have a black and white, green or brown taxonomy, because what we have in the final regulation is we have green activities, we have enabling activities, and we have transitional activities, and they all have to be clearly labeled as such. So this is something where we already have 3 shades of green, and there is a difference between them. And I think this is also a very important signal for the markets, these 3 levels. And in a way, and I realized it only after the whole adoption, that we, in a way, have a brown taxonomy, which is the Article 17 and the significant harm to environmental objectives. This helps to screen the activities that are really not in line. And on the reporting, is there a room for improvement? There is always a room for improvement. I think we need to have, and there's the environmental reporting legislation, we need to have more standardized and kind of a indicator-based rules for reporting. The trick is, and this is not going to be easy to do, is the companies are very different from each other, and it's kind of, this is going to be the big task. How do we create an environmental performance, a set of rules that will, on one hand, fulfill the objectives, so we actually can properly have the assessment, we have proper indicators for it, of the environmental performance of companies or activities, and at the same time recognize the inherent diversity between the companies, not only in terms of the size or types of ownership, but also in terms of the portfolio of activities. And it's not going to be easy, but we will have to find a way how to make it happen.
Yeah, and we have a couple of questions that have come in that I want to turn to in a second, but before we do, let me just give Karl the opportunity to respond to some of those comments from the policymakers, please.
Yeah, thanks. And I'm combining a few statements here. Elena said, at the end of the day, we should only put in what is relevant, because otherwise it's a never-ending story. Wolfgang said, what is not green is brown. And Andrea said, well, maybe what is not green is either brown or eligible. So I wonder where this is leading to. And now if I take my industry, the machine building industry, there is a large study by the Boston Consulting Group talking about the impact of the machine building industry, emitting, what are they emitting, and where can they help reduce emissions. And the result is that 86% of global greenhouse gases emissions can be reduced by using products from the machine building industry, 86%. So I believe this is of great relevance. At the same time, the machine building industry as a whole is only emitting 2% of industrial emissions. So we have a very nice leverage here between what we emit and what we can reduce as emissions all over industry. Still, the machine building industry is not in the taxonomy. So the question of relevance is a very, very difficult question. I do not really have an answer to that, but if I look at it from a company level, being a subgroup of machine building, hydraulics, which is probably never selected to be relevant, so we are either eligible or brown, and as we are not brown, we are eligible. And how do we prove that we are eligible? We can only do that at the time being by going through life cycle assessments or some kind of processes like this, which creates a lot of cost and trouble for the companies involved.
Okay, thanks, Karl. And Teresa, our first questions from the audience, please.
Thank you very much, Ross. So our first question from the audience is to Elena, and Ludo van Ooyen, a member of our audience, questions, how can we interpret the overlap of mandates between the European Platform on Sustainable Finance and the International Platform on Sustainable Finance? Elena?
Thank you. I think Andrea also might want to chip in into these questions. But for me, it's quite clear that the role of the EU Platform on Sustainable Finance is to, number one, to develop the taxonomy, the green taxonomy. So, and that means not only to cover the 4 other environmental objectives. Remember, there are 6 environmental objectives. The TEC, we only work on 2 of them, climate mitigation and climate adaptation. There are other 4, including waters, pollutions, circular economy, ecosystems, and so forth. So that's one. Secondly, and that goes back also back for Karl, the climate taxonomy is not finished. The TEC very much recognized that, particularly in the area of enabling activities, we didn't have enough time to complete, to look at all the activities. So we will foresee the enabling activities of the climate taxonomy to really enlarge. And there are a few other activities when it comes to both transition that need to be included, for example, on transport, shipping, or aviation, just as 2 examples. So first of all, our number 1 role is to expand the green taxonomy. Then there are 2 other subgroups. One of them will give a recommendation to the European Union on whether or not to expand the taxonomy to include social objectives, and how the minimum safeguards, human rights and labor rights in concrete, should be fully acknowledged in the taxonomy, in the sense of maybe fully acknowledgement is not the right expression, meaning exactly how those requirements should translate into from a practical point of view. Then there's another working group who will examine whether or not to recommend the European Commission to expand the taxonomy to include harmful activities and or neutral activities, which is what we were talking about. Yeah, I personally think that we should definitely expand to social activities. We cannot leave the S behind. And the final subgroup, that's the one I am rapporteur of. We look at exactly what Andrea was mentioning, so the usability, the data, how we implement the outreach, how we integrate the feedback from the different users and users. There's another working group, but that is specialized for the European institutions around measuring, monitoring capital flows and the impact assessment. I don't know, Andrea, if you want to add anything to what I just said. On the other hand, International Platform Sustainable Finance, my understanding is that it works on how they can exchange between the different countries views, perspectives on the different frameworks around sustainable finance, and very much we hope that the what sort of framework in terms of the development of other taxonomies we wish to share, it is the centerpiece.
Thank you very much, Andrea. The next question is for you, so I will also give you some time to react to Elena's comment. So to Andrea, Emily Dalebot asks, can we expect any delegated act soon on the taxonomy?
Yes. Thank you for the question. Yes, maybe just to complement what Elena said, not much because she explained it very well. Just to say that the International Platform on Sustainable Finance shows how relevant this is, not just for the EU, but for the whole world, because we see that since we launched the international platform a year ago, there is a very, very big interest from other jurisdictions. We have now 14 members to the platform, which together represent roughly half of world population, half of world GDP, and half of world emissions. So I think this shows what is the strong interest in the sustainable finance agenda in learning between each other. There is a lot of interest on what the EU is doing on taxonomy, on making sure that when we create each creates its own taxonomy, we make sure that they are comparable and that they work together, because the financial sector is global, and it's important also for companies, European companies, but also companies from other countries to attract investment from all over. So I think this is a very promising work stream, and we will continue to work with our international partners there, and we hope actually the other jurisdictions will be interested in joining this platform. Now, to answer the question on the delegated act, yes, indeed, there will be a delegated act coming quite soon. This is something which is set out in the taxonomy regulation itself, which says that the Commission should adopt the first delegated act on climate change mitigation and adaptation by the end of this year, and then it will be coming into application 1 year after. And then for the remaining 4 environmental objectives, this then will be done by end of next year. So the Commission will adopt another delegated act by end of next year, and then a year after that delegated act will also enter into application. So you can see how the taxonomy is gradually built up, and also it's to allow the private sector and all market operators to adapt to it. Just maybe to say that we will be publishing this first draft delegated act very soon for a 4-week public consultation. So there will still be an opportunity for everybody to give comments to the Commission before we adopt the delegated act. And another important step is that both co-legislators, European Parliament and Council, will have obviously a say on the taxonomy, so they can decide if they want to object to it or not to object to it. And this is also set out in the regulation, in the taxonomy regulation. They will have 4 months to do so, which can also be extended to 6 months.
Thank you very much, Andrea. We will move on to the discussion now. Ross?
Thanks, Teresa. We'll go back to the audience questions again before the end, but Wolfgang, I wanted to bring you back into the discussion, please, because there are calls from certain sectors, mainly from civil society, for the policymakers to take sustainable finance mainstream. Now, what does that mean exactly, and how might that happen?
Is that sustainable finance can't just be a matter of some green bond funds or green equity funds, but needs to be spreading across all financing, whether it's equity ETFs or fixed income funds or private equity or property. If we're going to face the challenges that we need to face, then it needs to be all of finance, not just a subset. So, looking at the taxonomy, the initial idea was to make sure that if a citizen buys a green fund, they know they can be sure that it's going to be a green fund, and there's not anything in there that common sense would say does not belong in there, and that's great. And the taxonomy obviously is already used way beyond that initial remit, and Elena is going to correct me if she disagrees, but it can't stop there. And we talk a lot about green and what it means to be green, and maybe things that are not quite green need to be funded as well. And I've said at the beginning, steel, cement, you can't put them into the green bond format because investors won't understand why that's supposed to be green. So we need to find other solutions. But it's not just about that. It's also about getting rid of the polluting industries, technologies, and that needs to be happening across finance, across mainstream finance. And I'll just say, regarding what Helena said about data, I'm concerned about the argument that we don't have enough data, because I've heard that for quite a long time, and I, of course, know what is meant by it, and it's partially right, but partially it isn't. When it comes to financing of fossil fuels, we know exactly what we need to do. The problem is that not that investors don't know what to do. It is that you can't prove to yourself that what you need to do is also the most profitable aspect. And that brings us to risk versus impact or outcome, as some people call it. As long as the financial sector and the regulators are focused only on the risk in their investment decisions, the risk to portfolio and bottom line, we're not going to get to Paris alignment, because Paris alignment wasn't decided as a goal, as a matter of profitability. It was decided because it was the right thing. And so I would argue that we cannot wait until we have all the data, because we'll never have all the data. we deal with a lot of uncertainty, and things that we now think are right are going to be will turn out to be wrong. That can't be an excuse not to go forward. And I'm not saying anyone has said that, but I hear those excuses along, and there are less leading institutions that do not see the requirement to go further than just making sure that one's portfolio is protected. So
okay, well, I'll give Elena the chance to come back in on that, Wolfgang, in a second. But I'm very pleased that you also mentioned the EU citizen there, because I often hear the phrase acting in the best interest of the end investor. So in other words, the EU citizen whose pension fund is invested in the market. Now, are they end investors, the EU citizens, are they getting the message that sustainable investing is good for them in the long term, or has that message not filtered down yet? So, Elena, maybe you can address that, and also some of the other points that Wolfgang has just made.
Yes. So let me start by responding to a couple of the comments that have just been made. Yeah. So the first one is on the on data. Let's be honest here. The fact that there is no data, it doesn't mean that you cannot do anything, but it actually means that you are limited to what you can do. I mean, we're not only talking about climate change, we're talking about a whole range of different issues and indicators, yeah? So for instance, one of the proposed RTS, regulatory technical standards that were included for investors was gender pay gap. So believe me, I am the first one who has been campaigning for a long time for gender pay gap and for gender equality. I used to work in my past life for Oxfam. Yet, when it comes to the reality, is that in Europe, only in certain countries, in very few countries, it's compulsory. Two of those countries are the UK and France. In those two countries, the concept of salary, what is included, you know, what is the employees that should be included as well, and how you measure the gender pay gap is different. So I would like then back to Wolfgang to explain me, how am I supposed to aggregate in portfolios in my investment universe of more than 14,000 companies when I only have that information for a few companies, and those companies being from different countries that measure it differently. I hope you're not suggesting that investors actually take a guess of what an estimate gender pay gap, because that actually not only it would be impossible, but the question back to you would be, what will be the meaningfulness of that? And that brings me back to, and this is just one example, but in the sense of carbon emissions, we need to be very careful that to say that when we estimate carbon emissions, it is fine to give an idea what a portfolio is, what is the footprint, as long as those estimations are represent at least less than half of the portfolio. Because if the entire portfolio is only estimated, then what do you get? Nothing. What's the usefulness of that? Because an estimation is you just take the average of the sector in terms of carbon emissions, and depending on the size. In fact, there are some really interesting studies that have proved how how little incentives some companies have to provide the completeness of the carbon footprints for their entire activities. So all I'm saying is that we need to be careful of what we ask, not to have perverse incentives. We need to prioritize, and we really need to work on the data. That doesn't mean that you cannot ask other things, yeah? You can definitely ask investors to ask companies about gender pay gap. You can really ask other things, but you need to be careful about what you're asking. And also we need to prioritize. That's all I'm saying. So that's in terms of data. In terms of end investors, sorry, you wanted to come in. Ross.
Yeah, Wolfgang, just very quickly reply on that to tie up that loose end before we talk about the end investors, please.
Yeah, I've been a portfolio manager for almost 20 years, and there's no day as in the life of a portfolio manager where you don't guess and you don't estimate. 20 years ago, we didn't have IFRS. We had to compare French GAAP with German GAAP. You couldn't compare them. You had to compare them. It's never, comparability is a great concept, and it's great when you have it. But in reality, you never have it. You almost always have to fill in information. Second thing is, if you're not happy with
gender pay gap, you can compare business or financial metrics, but you're talking about the
okay,
salary.
but you are the investor, right? You are the investor. You own these companies. Tell the companies what data you want to have. Tell the companies what data you want to have.
Okay, Elena, go ahead, Elena, and then on to end investors, please. Elena, please.
Me or her?
Yeah.
Elena, please.
Sorry. So in terms of end investors, I think that what is important is that when we talk about end investors, we really refer to all of us, to the average citizen, yeah? And that an important share of the assets under management that they are in the market are ultimately the pensions and savings of all of us, yeah? I think that, and maybe Andrea has a much more fine-tuned number, but it is over 1/3 of the market of assets under management in Europe that are owned by pension funds. Yeah, so so that's why it is so important to, when we talk about acting in the best interest of those end investors, because it's acting on the best interest of citizens. So there are three aspects that I believe that need to be taken into account. So from a purely financial perspective, most of when we talk about savings and pensions, we're talking about long-term investments. We know that climate change in particular, but also other environmental social risks can have and will have a financial impact in the long run unless they are managed. And that they will impact, almost all economic sectors are impacted by climate change and other environmental aspects. So that means that they will undermine the ability to generate returns. So that's one very important point. We also know that even without taking into account environmental and social risks, the situation today with our pensions is not so encouraging, that unless we can ensure long-term net returns significantly positive, we will not be able to provide a decent replacement income through retirement for us, you know, the ones, the citizens that we are working today. It is also, and we know this very well, that it is also from our pockets that we will have to pay to overcome any negative externalities that are not being addressed. It is our generation and those to come that will suffer the consequences of climate change and scarcity, and the scarcity and poor quality of natural resources. So bottom line, the more we procrastinate action, the higher the bill will be for the average pensioner, saver, and citizen.
And that's the question I'd like to, thanks Elena, that's a question I'd like to shoot back to the policymakers. The EU institutions have been accused in the past of being too far removed from the EU citizens. I guarantee that there are very few EU citizens that know what the taxonomy is or what it means. Is this message getting down to the EU citizens, the owners of the pension funds, or not? Andrea?
Well, I don't think that the EU citizen need to know what the taxonomy is as such. I think what the EU citizen needs to know is what are the risks that he or she is exposed to if he or she invests his life savings, his pensions, and so on into activities that one day may have a very negative impact on their investment and ultimately on the money that they're set aside to prepare for their future retirement, for their children's education, and so on. And this is the kind of information that EU households, EU savers, EU citizens need to know. And this is what we are focusing on. First of all, we think that it's a part of the fiduciary duty of financial intermediaries, so those who manage money on behalf of their clients, to integrate these considerations into their daily activities and in the way that they manage that money. So, for example, an asset manager has the duty to consider already that investing money into activities, into assets that may one day become stranded because, for example, there will be no longer investment going into coal-fired power plants, is simply bad for the client. So they have to take this into consideration. They have to disclose to the client in very clear way how they are managing that risk. And if they claim that they are investing into a sustainable product, then they have to explain very clearly to the client how they're doing that. Because this is what fighting greenwashing is really about. It's not necessarily that you have to invest into those sustainable activities. It also depends on the preference of the client, but you have to put everything in place so that the client have all the elements to choose where he or she wants to invest and for what purpose. And if they do want to invest into sustainable activity, but again, this is a choice of the end investor, but if they do want to invest in those activities, they need to have all the information to direct their investment into those activities. And for this, maybe just if you allow me to go back to the point on data, I've never managed any portfolio. I've never worked in an asset manager. So I mean, this is only the perspective of a policymaker in that, from that point of view. But I do think that we need better information there because we imposed a lot of funds into financial intermediaries to disclose this information to their clients. And I think it's equally important that the source of that information, so the companies themselves, they are provided. Of course, it's also up to the asset manager, to the pension funds and so on, to find that information, to put pressure on the investee companies to provide that information. But I think if we have some minimum information requirements and standardized information requirements, that will make life easier for everybody, including for the companies who may otherwise be completely left out of the radar screens of investors, those investors who are looking for sustainable investment opportunities.
We've got a couple more questions that have come in from the audience, but Karl, I know you wanted to respond to some of the comments just made.
Daphne, which is worrying me a little bit. I think some came with you, Wolfgang. You mentioning Paris is not about risk or profits. Risk. Paris is about doing the good thing. I think there is a very straight relation between reaching the sustainability goals, profitable companies, and financial risk assessment. The more profitable a company, the less risk it is to put money in it. The more profitable a company is, the more resources it has to innovate into technologies which then help to reach sustainability goals. So I think we should keep really that triangle in mind. And I'm really afraid that what we are discussing here might even hinder innovation by creating a taxonomy which is based on a status quo, which makes it attractive for investors to invest in companies which are basically working on the status quo instead of looking at innovative solutions which may not be part of the taxonomy, may not be eligible at this point in time, and therefore do have disadvantages in their financing, and that's a very, very dangerous path to go.
Thank you very much. We have a question from the audience to our policymakers. Maybe Martin can pick it up. If a technology is not eligible for sustainable finance, would it mean that financing becomes more expensive?
Thank you. And I would like to connect also to what Karl said in terms of the innovation. I would say that if it's not something which is based on the taxonomy, if the financing will become more expensive or not. This is about then the market seeing a risk. And I think this is where it's not necessarily only about whether the activity is a green activity or sustainable activity or enabling activity or a transition activity, but whether the activity contributes to does significant harm. So is within the Article 17 of the taxonomy. Why I'm saying that? It goes back to the question, what about those activities which are not sustainable, or one of the three groups covered in a positive way by taxonomy? Well, they are outside of the scope, but it doesn't necessarily set out whether they're good or bad. They're neutral, yeah? And that's where kind of on the opposite side comes the do not significant harm, which is talking about, okay, it is about a lot of greenhouse gas emissions as one of the criteria. And that's where I think it's something which, with or without taxonomy, the investors would clearly see that this is something which is having an increased risk, and therefore it is likely that it's going to be more pricier to obtain financing. And I hope so, honestly, for building a new coal-fired power plant. Let's be honest, this is not something which is in the public interest. Because ultimately it's damaging also the future prospects of other businesses adding to the greenhouse gas emissions massively. So I think this is where, yes, for some activities, there is going to be increase in the borrowing cost, is my estimate, but it's not necessarily linked to taxonomy. Look at the divest movement in terms of the fossil fuel companies that's been already around for a number of years. I think this is where one of the drivers behind the taxonomy is to seek a clarity so the markets can decide. So it's not the taxonomy making decisions, it's then markets being able to make decisions based on a certain rule. And I think that what Karl, you said, this is going to be, of course, about the fine-tuning, whether the innovation will be covered or not. But this is where I hope and expect from the Commission that the delegated acts will be done in a way that they will be exactly encouraging innovation. That's why the legislation is talking about the principles. And when we look at delegated acts, it's going to be not necessarily just a list of different things, but it's going to be about how do you assess a certain parameters. So when my innovation I'm coming up with market to, and I'm trying to get funding for, is, for example, enabling us to have energy neutral or positive even buildings, that I came up with some invention, it should be possible, and that's my expectation from the delegated act, to classify it as a green or enabling technology, and therefore be as an activity compliant with taxonomy. This is, I think, very important element, because we should not lose this potential for innovation. I think it was a very important remark. And just one very small on the linkage to the public. I think Andrea said it in a way very well, but maybe it sounded a bit harsh. Most of the public doesn't actually know about the REACH, the registration, evaluation, and authorization of chemicals. I worked as a campaigner on REACH years ago, and honestly, the best way to talk about it was not to mention it. This is about the content, and I think this is where we need to talk with public and keep on talking more with public about what actually it provides. Not necessarily technical detail, it should be transparent, but about what it gives as a tool for the people. And this is where the real trick comes, and we need to talk more, there is no doubt. But this legislation for me also came about based on the pressure and demand from public and investors alike.
Okay, thank you, Martin. We are approaching the end of this afternoon's debate. I sense there's still some disagreement around definitions and practicalities, how sustainable financing will work in practice. But I would like to give you all the opportunity to make a final remark. It's pretty clear to me that this, if it's going to work, needs to be a real team effort. So I guess my final question to all of you is, what's the one main thing as policymakers, as the financial sector, as civil society, as industry, that you can or should do to achieve an ecological economic system and ensure sustainable investing is a success? What's the one main thing that you take away from this debate as an action point? Andrea, let me start with you. Everyone, briefly, please.
Yes, thank you, Ross. Just to say that sustainable finance and taxonomy are not ends to themselves, let's say. They are tools to get to an objective, which is the objective of the Green Deal, to make Europe the first climate neutral continent, to address all the environmental challenges that we have ahead of us. So I think it's important to see this as a tool to seize an opportunity. So what I take away from this debate, I think it's importance of this feedback with all the relevant actors, first and foremost the industrial sector, the private sector, to really make sure that this tool is appropriate for them to have the funding that they need to make the transition and to turn what could be a challenge into an opportunity also for them.
Okay. Wolfgang, your final thought, please.
I'd say it's important to realize that this is not a journey, but that we are in a climate crisis. The IPCC has told us we have until the end of the decade, which after this year has gone so quickly, we've only 9 years left. We cannot wait and we cannot discuss it for ages. We need to act and we need to increase ambition. And I would say that looking at the public, that's what the public expects and what the public would be very clear about. So let's not underestimate the clarity of the ask.
Thank you. Elena, your final thought.
Yes. We need to, as an asset manager, we need to continue to decarbonize our portfolios. We need to do it in line with the EU objectives. So that means in line with the trajectory of carbon neutrality by 2050. And at the same time, we need to continue to increase our green investments. And for that, we need to really scale up our engagements with the companies we invest in, and at the same time with our clients, so they are clear about the decisions that they take.
Thank you, Elena. Martin.
I very appreciated we having this discussion. I think we should definitely on a multi-platform continue talking about how to achieve the objectives. But I agree, the crisis that we face is existential, and I'm very concerned talking to scientists that the ambition will constantly need to increase. That's something which I'm not happy about, but the urgency is really there. So let's not talk if to go climate neutral, if we need to address the crisis in biodiversity, but how, and how to really do it in a just way for everybody in society.
Thank you, Martin. And Karl, please.
Well, first of all, I'm very impressed with the discussion here. I totally agree that speed is of the essence. This is not a matter we can reflect upon on and on. However, at the same moment, I strongly believe in having discussions like this and taking different perspectives and see what comes out of this and what the next step might be. Having said so, from our industry, I think if we want this to be a success, we should make it easy for the companies. We should make it efficient for the companies to join and to work with the sustainable finance system. The easier and the more efficient it is, the faster it will be accepted by companies and industries. That's key for me. So if you do something on that side, we would be very grateful. And last not least, I have a big trust in the swarm intelligence of innovators, of small and medium-sized companies out there. And as we have to be fast, don't slow them down. So make it easy and efficient.
Okay, so urgency is the key, and efficiency can certainly lead to speed. I'd like to thank all of our panelists today for a very interesting discussion. Please read more about this on euractiv.com. We will continue to cover this with great interest. But in the meantime, thank you all for joining today and enjoy the rest of your afternoon.